Good evening and welcome to Data Focus tonight. We're diving deep into one of the most explosive AI stocks of 2024, Palantir Technologies. We'll break down the numbers, analyze the technology, and ask the big question: can Palantir sustain its extraordinary momentum all the way to 2027? Let's start with the incredible run. In 2024, Palantir became an AI powerhouse. The stock surged an astonishing 340%, making it the top performer in the S&P 500 and the third best in the Nasdaq 100. But this story is about much more than just a stock price. Palantir is fundamentally changing how businesses and governments use artificial intelligence. So, what's driving this incredible growth? Let's follow the data. In the fourth quarter of 2024, Palantir reported revenue of $828 million, smashing analyst expectations of $776 million. The company posted adjusted earnings of 14 cents per share, well above the 11 cents analysts were looking for. But here's where it gets really interesting. U.S. commercial revenue skyrocketed 93% year. That's a growth rate you rarely see, even among AI's biggest players. Meanwhile, U.S. government revenue wasn't far behind, rising a solid 45% year-over-year. The engine behind all this is Palantir's Artificial Intelligence Platform, or AIP. This isn't just another large language model. AIP is a unique platform that connects AI directly with a company's existing systems and operations. It works with any cloud and any AI model. The real magic is something called the ontology layer, which allows the platform to reason and make sense of incomplete data, huge leap beyond simple data analysis. And here's the genius part. Palantir created intensive bootcamps. They pair customers with their own developers to build custom AI solutions in as little as 5 days. This strategy completely demystified AI for businesses and accelerated adoption at a blistering pace. The results speak for themselves. Palantir ended the third quarter with 629 customers, a 39% jump from the previous year. They aren't just adding more customers, they're closing bigger deals, faster than ever before. This momentum caught Wall Street's attention in a big way. In September, after achieving 4 straight quarters of profitability, Palantir earned its spot in the prestigious S&P 500. Then, in December, it moved to the Nasdaq, securing its inclusion in the Nasdaq 100. These moves opened the floodgates for institutional investors, fueling even more demand for the stock. Now, this is where the story gets complicated: valuation. Palantir's stock currently trades at a price-to-sales ratio of 108 and a price-to-earnings ratio of 385. To put that into perspective, at these levels, it would theoretically take over a century to get your investment back from revenue and nearly 400 years from profits. Wall Street analysts are split. The consensus rating is a hold, with an average price target of about $167, but forecasts swing wildly from a low of $50 to a high of $255. So, what could this stock look like by 2027? Predictions are all over the map. One conservative model, which assumes about 40% annual earnings growth, projects a target price of $116 per share by the end of 2027. That would actually be a 25% drop from today's levels. On the other hand, more optimistic forecasts see the stock soaring to between $350 and $770. It all hangs on one critical question: can Palantir keep growing revenue above 30% while also expanding its profit margins? Let's look at the bull case. The global AI market is projected to hit $1.8 trillion by 2030. Palantir is reportedly the top-ranked vendor in the AI software platform space, and its core products, Gotem for government and Foundry for commercial clients, have very limited direct competition. Plus, its business model is built on predictable multi-year government contracts and commercial subscriptions, which generate steady cash flow. Now for the bear case. History shows us that no tech company has ever been able to maintain such a high valuation for long. During the dot-com bubble, giants like Microsoft, Cisco, and Amazon saw their price-to-sales ratios peak in the 30s and 40s before crashing. Even Nvidia's ratio peaked around 43 during the recent AI boom. If Palantir's valuation comes back down to earth even while its revenue keeps growing, the stock price could fall significantly. Recent developments add even more to the story. This past year, the U.S. Army awarded Palantir a massive $10 billion contract spanning 10 years. The company also secured a £1.5 billion defense deal with the UK and is even expanding into space technology, positioning itself as a critical infrastructure provider for AI in orbit. So here's my take. Palantir has built a powerful and genuine competitive advantage in AI software. Its platforms are deeply embedded in mission-critical operations, which means customers can't easily switch to a competitor. The fundamental business is strong, with accelerating revenue and expanding margins in a massive market. But valuation matters. At today's prices, the stock is priced for absolute perfection. Any slowdown, economic headwind, or shift in investor sentiment could trigger a major correction. For long-term investors willing to ride out the volatility, Palantir could be a high-conviction bet on the future of AI infrastructure. For everyone else, waiting for a more attractive entry point might be the smarter move. The data shows a company that is executing brilliantly, but a stock price that has run far ahead of its fundamentals. That's your AI stock analysis for tonight. For more data-driven reports like this, make sure to follow us at Data Focus Official. I'm Dataman Kenneld. Thanks for watching, and we'll see you next time.